Hey traders, hope you all having an awesome weekend. So a weekend update, and in this weekend's video we're going to do analysis of natural gas, gold, silver and crude oil. And as usual, over the weekend I want to give you something valuable, something educational for you to learn so that it will help you to take efficient trading decisions. And there will be so many mistakes you can able to avoid if you listen to the first part of the video, as I'm going to give you lots of stuff to learn, lots of example and the trades we had throughout last week, the zones that played out, the zones that did not play out, and how we managed from the zones if the zones did not play out, and how we had an entry inside the zones as well. So lots of stuff to learn in the first part of the video, and I'm going to show you the example of few commodities, few forex pairs, and the trade alerts which we had, and the exact entry condition that I don't send as a signals or as an alert, but exact conditions are happening every single day in a live market. So starting with this month's results, so far we had in the priority group, and the natural gas is still a winner because we did not have a single losing trade out of natural gas. We had 1, 2, 3, 4 trades of natural gas throughout last 2 months, and all of them were the winners. Now this is something I'm going to talk about in the analysis part of this, in the second part of the video, that how the winning trades can turn into losers if you don't manage it. These are the results so far this year, and as you can see we are up 21% and just with 2% of risk. Now something important to learn is some of you, they joined priority group in the middle of the month or the middle of the week, and what happened is, let's say we had this month starting from 20th of Feb, we had 1, 2, 3, 4, 5, 6, 7, 8, 9 trades from 20th of Feb till Friday. Now out of 9 trades, as you can see, we had 1, 2, 3, 4, 5 losers and 4 winners. Now if you're someone who just joined, but if you look at the large sample size at the end of the year, that is why I journal all my trades. That, as you can see, from day 1 when we took the first trade of the year, that was 2nd of January, till now we are up 21%, and we might see a losing streak here that shouldn't hurt you. Now imagine, let's say we had a losing trade here and then we had a losing trade here. Then in this type of situation, in this type of condition, what you do, you start getting panic that you have 2 losing trades in a row, and trust me, that is nothing. I've seen more than that, way more than that, around 5 to 6 losing trades as well. Now after that, 1 winner, 1 loser, and that is a point where you start doing revenge trading, even though you're following your strategy, even though you follow your rules. But when you see a losing streak, it all depends on your emotion, how you control your emotion. In this losing streak, you need to be very calm, very patient, wait for the next entry, and that might be a start of a winning streak. And that is how you can able to make money in the financial market, not just looking at 3 or 4 trades or 4 or 5 trades. You need to see the large sample size. If you remember, the last year we had made 178 to 9% returns out of the trades, only the trades we took here in the priority group. So that is something I want you guys to understand and learn, that just few losing trades doesn't make us think that we are doing something wrong. It is just a part of the process, and it is something we need to look at the end of the year. If you have a tested strategy, if you are patient enough, keep on taking the same trade again and again, follow the same rules again and again, and trust me, at the end of the year, if your strategies are tested, then you will come out as a profitable trader. So as you can see, 68% winning ratio till now, and that is just 2% risk. Let's say you are someone who want to take 3% of risk, and just in 2 months and few days, you have made $3,200, and that is an average of $1,000 every month just on a side, and that will accumulate every month, and by the middle of the year that compounding will give you a really good ROI. So that is what you need to understand if you are in a trading business. Make sure treat it as a business, not as a gambling machine. Now, a very important point I want you guys to understand. Now, when I send you the trade alerts, sometime I entered my trade first early, and then I sent and make a file to send to the members. Sometime you entered at a very good price, give us a pullback, you let's say entered here, and in that case you have a better ROI, risk to reward ratio, and you can able to enter in a good price. But sometime when the price is, let's say, here, and I've sent a trade alert, in that case, what you need to do, wait for the price to pull back, enter with a limit order so that you have a good ratio 1-to-1 initially, and then you can manage it till wherever you want to manage it. That is totally up to you. So if you follow me in the priority group, make sure you understand that if you are late, don't try to jump in the trade if you are already late. But if you get a better price to enter, then that is totally fine. As long as stop loss is not hit, you are still under the area. In that case, you can still enter and have a better ROI. Now, if you are my MMTA full course student, you don't need to wait for my signals, and this is something I call a premium plan, and one-time investment or nothing else. With that, you have a standard plan free for whole 1 year, and this is not just a one strategy you will learn few other strategies, the one I personally trade and the ones that have full rules. Once all the rules are met, you take your trade. We have a strategy where we use pin bars. We have a strategy where we use 382 candles with the rules. We have a strategy where we use RSI, overbought, oversold situation in combination of other confluences. Lots of other strategy, but all of them are tested. If you are my student, then we have an other trades in the market. Now, these are the trade alerts I've shown. The results are sent to my priority members, sent to my students as well, because I always say it is not a signal group. If you are looking for the signal group, then there are tons of group out there who wants make money off you. But I send you the file, the trade alert, so that you can see the confluences and enter your trade according to that. Now, an example of this pair, right here, I've sent to the member a winning trade that we have a price trading above 50 EMA and 20 EMA in a nice trend. So what do we do in a trending market? We buy in the trending market. Now, I've also sent this zone to my members to look for a sell trade once the price is inside this area of value, and that is not one of my valid entry condition. In case you're wondering, we are in the zone. We had no aggressive entry. If you're my student, you know what the rules are for the aggressive entry, but we had no condition. Still, we had a good push down from the zone around 100 pips, but we still did not enter. Where we entered, once the price hit the zone, we had a pullback, we had a bullish engulfing pattern. Now, in the trending market, in the pullback, a bullish engulfer, it is a signal that the price is likely to push higher, and that is when we entered a trade, and that is when I sent this trade alerts to my members. Right here, as you can see on the screens, the price when I sent this trade alert to my members. Now, like I said, it's not a signal group, and this is something I want to show you. A next trade right here, exactly the same condition. Do you see the similarities? A trending market and a trending market right here. Nice trending market trading above 50 and 20 EMA. Both we had a pullback followed by a nice bullish engulfer, and that just barely hit my take profit right here and then pushed quickly back down. But we are out of this trade. Now, I've seen the traders, they don't take profits. When the profit is hit, they are greedy. They want to see a price to push up. And what happens when the price start to give a pullback and they see this type of big moves, they cut their trades rather than just taking profits and move ahead to the next trade. Yes, if you are managing it, keep on managing that, and one good trade can give you a better ROI. If you are not managing it, if you are a beginner, I always recommend to use 1-to-1 in beginning and then start to manage your trade, because when you see a streak of winning trade, it will help you in your trading psychology, and once your trading psychology is strong, then you can manage your trades, and then if you are out in a break, you know that a next good trade can give you good or better ROI. So that is what I want you guys to look. Conditions in the market, if you spot conditions like this, let's say you have received a trade alert and then you have seen one more condition in the market, you can always email me and ask Omar if that's a valid entry or not. In that case, I can answer you according to the condition if that is valid or not. That is what you're going to learn in the priority group, which is right here, a standard plan. That is where I'll help you. I send you trade alerts, send you the zones for commodities, forex, and indices as well, and and basic coaching as well, the one I've just explained. But premium plan, you don't even need me to send you a trade alert. You see lots of other entries in the market, lots of other conditions and other strategies that will build your trading portfolio and that will give you better ROI instead of just using 2 strategies which I teach here, because if I start teaching all the other strategies, it will do nothing but confuse you. So I want to keep it simple. With these type of strategies, that is in the trending market, or if you are trading a counter trade, we have a very important and very detailed rules to take over trades from the counter trading zone, how to mark these zones, everything you're going to learn there. But that is why I send you these zones, so that you just look at it and take your trades according to what I send you as the trade alert if you are in my standard plan. So that is what we had, a nice example of a trending market. And now I want to show you one more example, which is right here. Now exactly the same, we are above 50 EMA, we are nicely trending above, but that was a losing trade right here. Now that did not hurt me, because after that we had this GBP CAD trade as well. If I blow up every single thing in the single trade, I won't be able to take or carry on with my next trade. That is why very important to use 2 to 3% of your risk. I personally use up to 2% of risk according to my account balance, and then I can able to get another good and better trade. So in trading, we have a loser and we have another losing trade, which is right here. Right here, aggressive entry from the zone. We were looking at a nice bounce, which we did not get, and that was a losing trade. But with that, we had a natural gas trade I've sent to the members, which is right here, and both target has been hit. As you can see, this was the trade alert I've sent to the members, and right here, after that losing trade, we had good winning trade as well, and that has recovered all the losses because that was a good push up out of natural gas. I'm going to do the detailed analysis of natural gas in a very short moment. Now, out of the commodity zones report I've sent to the members, we had one commodity that finally hit and reached the area of value we've been waiting from a couple of weeks. And at this point, if you see, the price hit my zones, formed a nice double bottom pattern right here. There was an entry with this green candle right here, and that nicely pushed up 1.421 targets, and that is how we enter and exit the trades. Now imagine you did not exit your trade. 1.421 is enough for me because that is better than 1-to-1, and if my 1.421 target is hit, I stay out of the trade and look for the next condition, because I want to make money. I want to pull profits out of the market, not just look at the profits. I want to pull the profits so that I can build my equity and move ahead to the next trade and keep on compounding my profits. If you hold on with your trades by not taking your profits, then trust me, you're not going to make money. You're just going to go in circles and circles, and eventually you're going to give up because you will think that trading is not for you and it is not something can make money for you. But it can make money. I've shown you the trade alerts and the results of that. Just the priority trade alerts has given me insane amount of results. There are other commodities which we are still looking at and paying attention to the zones I've already sent to the members for the possible pullback or a push up, which I'm going to mention in my next weekend's video. So good example of taking your profits in time, make money and move ahead in the next trades. Now, before I wrap this part of the video, I just want to show you one thing here, that as you can see, I've sent this report to my members that we are looking for the possible push down from this zone, but the price just shoots higher. And that is what I want you guys to learn from it. Learn from an example that if there's no trading condition here, you don't need to enter your trade. Instead, we got a buy condition and price massively broke above the zones I've sent to the members to look for the sell trade. Now, what will happen? This zone will now turn a level of good support, and I will now use this zone as my bullish area to take my buy continuation trades. That is how we use the zone. If the zone is broken, if you have no signal, use it as a next level or support or resistance. So with that being said, let's wrap the first part of the video and let's start our analysis, starting with natural gas, gold, silver and crude oil. And what do we have right here? So as you can see, the price is now pushing lower out of this double top pattern right here. Now it is very important to see a break of the anchor levels. These type of levels are very important. As you can see, when we had a price hit this anchor level, we had a deep pullback. With this bullish candle, the price started to push up, and what happens? Eventually it broke above. Now at this point, once we are broken above with this candle right here, we had a signal that price now wants to push higher. We had a price pushed higher, and then we had a pullback where we had a buy signal right here, and we took an entry with this buy signal which is bullish engulfing pattern right here. As you can see, let me remove these lines where we entered this trade. Our target 1 and target 2 has been hit. So that is how we do our analysis. If we are pushing, the price is pushing up in a trend, we are only looking for a trending trade, and we had a push up, break above, pull back, bullish engulfer, a nice push up that is enough to hit your target, but the price failed to break and close above this anchor level. Like we had a price break and close above right here, we had a signal that price will likely push up, but here we had just a wick gone above and did not had a condition. Now the thing I want you guys to learn and understand, that when the price hit you take profit right here, I was out of the trade, and that is one of my winning trade I've added in my portfolio. Now when I had a winning trade, what is causing you to hold your trades? When you have a winning trade, stay out of the market. Look for the next condition. Now, I've clearly mentioned I want to see a deep pullback, and I'm expecting a deep pullback from here. I've mentioned that in my last video. Now, I'm expecting this pattern looking at this double top, and I'm expecting a good breather and a good pullback from here. If I see another big red candle below 50 EMA, in that case, I'll start to look for a bearish trades only. Otherwise, wait and see how it goes. Just one candle will not make me decide that I'm going to start to take my sell trade. I want to see one more red candle, a good bearish momentum, completely broken below this anchor level. Only then we'll start to look at the downside. And that is what exactly has happened, because we had a chance after this 1, 2 and 3 rejections. We had a chance that price is failing to break above, and we had a bearish candle that pushed the price lower massively. And I've said that I'll be looking for a possible trades above 50 EMA. That will be a bullish engulfing pattern for a price to push up in a continuation, or within this anchor level. If I see a condition, in that case I will still go long. Nothing has happened, but why are you still holding on with the trades and turn your winning trades into losing trades? Once your take profit is hit, you don't need to be greedy. Take your profits, come out of the market, stay calm, look for next trade. Look at the other market. If you are trading forex, crypto, look at them, look for an opportunities until you see a condition. If you just trade natural gas, then look for a condition. Do you see any condition here? Any bullish engulfers? Any bullish aggressive entry within this anchor box? No. Instead, the price broke below. For me, I was fine, I was calm, because I did not enter my trade and I was waiting for the price for the next condition. And I've mentioned, once we are broken below with the 2 momentum candles, big candles, in that case I start to look for the pullback, and I will only look for my sell trade. Now that has happened here exactly. We had a break below with the momentum. At this point, we are below 50 EMA and 20 EMA. At this point, what to expect from here? Now, if you remember in my few videos before, we have this zone ready, which is right here, something like this. Now I have the zone ready, and now at this point, a zone below can be of an area for rejection. We had a push down, pull back, and then we can get a possible push down and a possible double bottom pattern. Now I'm going to show you one more important point. Previously, the price was start to push up after a downtrend. I want to show you one example, which is recently right here. Now, after a nice downtrend from here, what happens? Price hit a level of support right here, and it start to push up and broke above 50 and 20 EMA. Exactly the same condition. Price pushed down, pushed up, broke above 50 and 20 EMA, and then broke below. See, exactly same condition. Now I want to take you back here. What happens? I want to show you how the price action works sometime, so that you understand we are not taking trades without a condition. Here we had a condition. Right here, the price pushed up, formed a head and shoulder pattern, right, and then broke above. So after the break above 50 and 20 EMA, what we were looking at? We were looking at a possible pullback entry bullish to take long trade, or we were looking at a possible double bottom pattern right here to take another long trade, right? And we did not get any condition. We did not get a bullish engulfer to take long trade over 50 EMA, or we did not get a double bottom pattern to take over double bottom trades. Instead, after the price break above, now the traders start getting excited. Now we are going to see a reversal, which we had, that was coming, but we had no condition. After that, the price broke below. Once the price broke below, what I was looking at, just sell trades below 50 EMA, and we had no sell condition below 50 EMA. And then the price consolidate for a while, broke above this level, and then eventually it pushed up without a price to form double bottom pattern. Now at this point exactly same can happen. Now we are looking for an entry conditions. Number one, we can expect a pull up to 50 EMA followed by bearish engulfer, must be below 50 EMA. In that case we will have a sell signal, as now I'm looking for sell condition. Once we have that, we are good to go short and keep on taking shots till we are in this rejection box. Right here I've marked a little rejection box. Now if there is no condition, exactly same as previous example, we can get consolidation, right, and then break above eventually, and then the price can likely start to push higher as we are still in an uptrend. Uptrend will end only once we are broken below this low. In that case the price will form a new low and possibly break below and start to push lower, but which we did not get. This is just a process of a pullback that can again push higher, or that can form a double bottom before we can see another push up. For now, for the short term, we can look for a condition which is bearish engulfers and keep on taking shots. Once we are in this zone, I want to see a price who rejects from here followed by green candle, bullish engulfing candle, a red and green candle, or a 382 candle within this rejection box. A wick can go below, that is totally fine. If we have a candle to close below this rejection box, then I will not look for double bottoms, but I will still look for my bullish trades. That will be my aggressive entry and possible double bottom from this area below in green. For now, for a valid double bottom, I want to see a hit of this red box, rejection, and then a push higher. But if we have a dramatic push up, let's say the price did not make it to this level and we are broken above 50 EMA, then we have a very good chance that price will then push up to the next level of resistance, which is 2.033. that goes up to 2.169, from where we can expect a very good and deep pullback before the price will push higher. So these are the conditions. Now I'll be looking at wait with conditions and wait with patience. If we have a sell signal below 50 EMA, we're going to take short. If we have a double bottom, we're going to take long. If we are broken above 50 and 20 EMA, let's see how the market open. If we are open gap above, in that case I want to see a complete break above this high to take my next pullback entry bullish till we are in this area in red. So I hope you understand, and I hope you have no confusions left. If yes, you can always email me at support@thewaitofmoneymarcus.net. So at this point, exactly the same condition. As you can see, we have this good anchor level that has acted as a good level of support previously, and a resistance as well recently. That is why very important for the price to break above, to hit this level above, which I've already mentioned in my last video, which is right here, a little bit of adjustment, 2.166, that goes to 2.314, from where we are looking for a sell trade. For now, everything is same. Have your rejection box ready for your double bottom trade, something like this. A rejection in this box will be another buy signal, or if we are broken below this box, I will still look for buy signal until we are completely inside this box. Once we are broken below this low or this box, in that case we have continuation towards the downside. For now, we have no signal. Wait until we get a signal I've just mentioned. Here on EMEX, have these zones ready on your charts above right here. Exactly the same condition. Double bottom box is right here, and the zone below I've already mentioned in my last few videos, so you can feel free to check them out. Have these zones ready on your charts to take your next buy and sell trades. Next we have gold. Let's do silver first, because we are getting a nice situation here in silver. At this point, what do we have? Now I also look at gold and silver ratio, as price is now pushing up and start to push up from the level of support. That will be reverse in silver and gold. If we have a push up in this level, the silver will push down from here and gold will likely follow the silver. At this point, we have no signal yet. We have no aggressive entry. What I want to see, mark my rejection box, which is something like this, and let's change the color to orange so that we have more visuals of a double top pattern. So if we have a push up in this box, rejection without a candle to close above. If we have a candle closed above, in that case the double top pattern will turn invalid. For now, I want to see a push up and rejection with the bearish engulfers, inverted hammers, or a 382 candle bearish in this box. Once we have a condition, we are good to go short. I will keep my stop loss above this pattern, take profit 1-to-1, or wherever you want to take it till 50 EMAs also, where you can manage that. But this double top pattern will not a signal of reversal. That is enough to take your profits, come out of the trade, grab your profits, and then jump on to the next trade. That is what I'm expecting from silver. Once we have a signal, we are good to go long, we are good to go short. If there is no signal, I'm not going to take any trade. If you have a candle to push up, form a big red candle, in that case that is also a valid bearish entry. Keep an eye here. If you have no condition, let's say the price just falls without a condition and forms a next bullish engulfer. In that case, that is a buy signal, and then price will likely push up and forms a double top pattern. Here on gold, looking at silver is now in the level of resistance. If we have a price push lower, 50% retracement will be an aggressive entry, and take profit 1 can be 1 ATR, that is $13 will be your take profit according to the ATR. And again, do not take my words on it. It is just my opinion about the market, and nothing should be taken as any sort of trading advice. Now at this point, 50% retracement will be an entry for aggressive traders. 1.618 retracement can be a place till where you want to manage it. If you want to manage it after one take profit 1 of $13 is hit. If the price did not make it to 50% retracement and just form a bullish engulfing pattern above 50 EMA, that is also one of my valid condition. I will again use 1 ATR from a target. So I have your Fibonacci tool ready, and the way I plotted from the top of this candle right here till the zone below, which is right here, the pink zone, I have my Fibonacci tool ready for aggressive entry. Otherwise, look for both conditions, aggressive and non-aggressive. Where gold is bullish, we can get a likely pullback before the price will push up again. Last one, we have crude oil. For crude oil is still ranging sideways. We have no confirmation for crude oil. What I'm going to do, I'm going to mark a little horizontal line, which is right here and which is right here. So what we can expect, a little range out of crude oil. We can get a push down, push up, push down, range, push up, and eventually price can likely break above this box. Looking at a nice trending market, we can only expect a range within this area, and once we are completely broken above this high, in that case I'm going to start to look at the level above, which is right here, and once the price completely broken above this zone, only then we're going to start to look for the bullish pullback entry till we are in the zone above in red, which I'm going to mention once the price is broken above. For now, have both area mark on your charts. If we are, let's say, dramatic push down, broke below this low, in that case we have a continuation, a bearish continuation towards this level right here, from where we're going to look for a next buy trades. For now, wait how the price action goes. We can expect some range, push down, push up, push down, push up, and eventually what I'm expecting, a break above this level. Once we are broken above, only then we're going to start to look for next buy or next sell trades. So that's it for commodities, guys. Hope you got a value out of today's video and today's lesson, and I hope you have learned something out of that and implement that in your trading psychology, because in trading, emotions plays very important role. Control your emotions, only then you can able to control the market. Hit the like button for me, it really helps me in a YouTube algorithm. Subscribe if you're new so that we can all trade together and trade efficiently. Hope you trade green the rest of the week. Have an awesome weekend. Take care.